So grants typically ask for financial models. They look for budgets, they look for projections of financials, and they look for job growth. So I've got a bit of a financial model which I can show you some of the tips on how to complete that for grant applications. So I typically run a similar Excel workbook every time. So I'll just run you through some of the tabs and some of the key elements of it. So always start with a cover page, put your business logo on here, describe what the grant is, and then we pop into the next stage. The next tab is the P&L. So what we have here is the forecast financials. So we've got very simple P&L, income, cost of goods, expenses, and a net profit. So try to go back as far as you can through your historical financials, and then populate that against the income, costs, and expenses. If you've only got a few years, or maybe 1 or 2 years, put that in as well. But as much as possible, and then what we need to do then is project what's going to happen going forward. And the way I do that is in these little ratio selection down here, we work out what is the sales growth. So 400% between those 2 years, 100% between those 2 years, and then we can get an average. Now this average in this occasion is 250%. Now this can inform this forecast growth rate here. So let's use these numbers here and we whack them into here, and then this will give us a forecast. So I don't expect that the growth rate will continue for this organisation at 250%. So it's really information gathering to help you populate your forecast. So put in your forecast of revenue growth. Your cost of goods sold is the percent between your COGS and your income. So that could be the same, it could be growing, it just informs the forecast. So put in something realistic that's going to be growing forward, and then the same with your expenses. So what percent of your revenue, and then the same with your net profit. You may assume that you're not going to have any net profit in the first year or last year. You may have had no net profit in the previous year, so therefore that information is not relevant in your forecast. But put that information into your forecast area. And you may want to have an explanation in the notes somewhere, or in your grant application, why you've chosen 10%, why you've chosen 67%, compared to where your sales growth has been in the past. Some companies have shown massive growth over the past 5-10 years, but they're forecasting very little growth for whatever those reasons may be. There may be a manufacturer, there may be a downturn in the market. So just explain why you've chosen those numbers. And then, so that is the business without the project, without the grant going ahead. Then we need to look at the project by itself. So this is what you're applying for the grant. So there might be a number of elements to the grant, so a number of projects within that. And then we need to make some assumptions about what the revenue is going to be growing from that grant or from that project. So here we are at the end of 2020, we've just finished that year, we've got forecast years ahead. Now the assumption here is that the project will be undertaken within the entire 21 financial year, so up until June next year, and so no project benefits will occur until the following year. And so we're going to have a ramp up of 100 grand, 150 grand over the following year. So use those, whatever assumptions may be. So in this assumption here, I've chosen 1.5 or 150% growth each year, and then the same for the next project. And then we can have a percent of revenue for COGS that could be informed. So COGS is cost of goods sold again. So that's percent of revenue. It may change depending on the project. So your project might be a digital product when you did manufacturing, so your cost of goods sold might be a lot lower, or you might have higher expenses. So just make sure you have some reasoning behind why that might be different from, and it can be, why it might be different from your existing cost of goods sold or your expenses. So let's extrapolate that out for 5 years, and then we have a total. So our total revenue for this project if you sum up all the years and all those 3 projects, is $24 million. So the benefit of the project is $24 million. So you can choose 1 year, 2 years, 5 years, 10 years, whatever it may be. I normally just choose 5 years and say this is the benefit of the project. And I just use a 5-year window. And then we can also talk about the net profit of $3.4 million. So these are some things you can draw out and put in your application. And you can say, because the government is giving us however much money, it might be 100,000, 400,000, $1 million. With that money, I'm going to create, a net benefit of $3.4 million. And then you can talk about how you're going to invest that into other things. And then what you want to do is then consolidate. So we want to have our previous historical years, they drop down. So the revenue is 200 grand, that drops down. But then for our forecasted financial years of 242, we add in the extra revenue from the project, and then we have $6.5 million. So this all comes down to a consolidated. So we can then show that diagrammatically. So here is, often put in a line here to say this is our historical plus projected without the project. And then we can highlight a little bit of the section of the benefit with the project. And you can work out what those numbers are. So it might be something like that. And then so here is the straight line going up for business as usual. And then here is the benefit from the project. And then just go and annotate on top, the additional revenue from those 5 years. So, there's that number there. It's a bit different because I changed the numbers. And then additional profit for $4 million. So just a very simple way to forecast the benefit of the project from a revenue and net profit perspective. Another thing they often ask is your budget, or you split your budget over the number of years. So it might be a larger project and it may span a number of years. And you get paid from the government based on financial years or on milestones. So in this occasion, they broke down the activity into a number of steps. So preliminaries, procurement. This is for a manufacturing one. So ground floor slab. So a lot of fit out, building. And they wanted that split across the financial years. So we're starting at January. It's always simpler to start a project, 1st of January or 1st of July. It's just simpler for adding things up. So if you can delay your project until the start of on paper you can delay your project. It's just easier from a financial perspective. If it comes time to actually carrying out the project, start whenever you want. So this is just how we split up the project. And we have a bit of a Gantt chart. So when are we spending the money? When are we doing groundworks? And we just have, so we started here. When are we going to spend each of the total dollar figures? And then, so we're just going to spend 1% in preliminaries in the first 3 months, and we just split up that 1% across there. So, and then we go down to the next one. So that's just percents. Then we come into the dollar figures. So of the overall budget, it's just how we're allocating the money. So if we come down to here, I've just totaled per quarter. So it's just an easy way for cash flow. For the more complex grants, just a cash flow analysis for how you're going to spend money. For the more simpler projects, this might be just equipment you're going to buy or things you're going to do. It may not be as complex as this. You're going to buy a bit of machinery or hire a web developer or roll out a project. And if you can split it up in a similar manner, it just gives some more accountability for when you're going to put in invoices and put that demand on the government for the money. And so let's pop over here to the project cash flows. So this is where you put in your total budgets across the financial years, and that can be summed from down here. So we've got eligible expenditure. Sometimes you've got ineligible expenditure, but you're still carrying out that project anyway. Often that gets asked for. And then you've got our total project expenditure over the number of years. So there's our total project cost. And then it often asks you for the financing. How are you going to fund it? So we put in our $400,000 grant amount. It's anticipated. It's not confirmed. And then how much other money are we going to put in ourselves? So we're going to put in $4.5 million. It's a big build. And then that gives us our total budget of $4.9 million, almost $5 million project, of which we're only asking for 8%. So often the projects ask for, the grants ask for value for money. So the value for money question is, how much money are we contributing to the project? We're contributing, 92% to the project, over $4 million. So you talk about the value the government's getting for their 400 grand, they're getting an additional, for over $4 million for the project. Often another good measure is value per FTE, full-time equivalent job. So a lot of jobs, certainly sort of grants in this environment, are wanting more jobs to be created. So how much money are you asking for the jobs that you have created? So often that's a good measure. In the past, it's been, they will give you $10,000, $20,000 per job. So it's a good rule of thumb for the dollars you're asking for how many employees you're putting on. Some other areas is available finance. So you might need to talk about where you're getting your money from. I've spoken a few times about this. The best source of money on paper on a grant application is cash. So talk about that you have the money. Once you get a grant, you can go wherever you want. You can go get an investor, you can go get debt, go to the banks. In this occasion, the applicant had to rely on debt or finance of some manner. So that's why this was included. And then talk about when you need that money. You can also talk about is it confirmed or is it likely to go ahead. If you have like letters of intent, it's more risky than saying you've got cash in the bank. So always try to say you've got that confirmed. So then let's pop over to the employment tab. These grant applications are often broken up into a number of ways. So you might talk about, once the project is completed, what is your job growth forecast? So always talk about the number of jobs. It comes back to value for money. It comes back to whatever the intent of the grant is. You want to grow revenue, grow net profit, invest into the economy, and jobs is one of them. And so in line with your revenue increase, you want to show that your job increase is also occurring as well. It's good to break it up into what they're doing. I often put in a dollar value, how much you're going to pay that person per year. So you can then talk about the number, the quantitative number of how many jobs you're creating, and also the dollar value. So we're going to inject $200,000 in salaries for jobs. It's just another measure. So here we have here, we've split it by manufacturing, retail, head office, a number of different ways, 32 new jobs created per the overall ask. So it's just another way to talk about how many jobs you are creating and how much dollars you're asking for each job. It's often a rule of thumb the government applies. So if you're asking for $400,000 and creating no jobs, that doesn't look as good as someone that's creating 30 jobs. So it might be like for like projects, but the one that has jobs will get a higher chance of being funded. Sometimes you rely on your company cash flows to fund your part of the project. So if you're going to fund your part of the project with cash flows, once again, it's a bit more risky than having cash in the bank. So you may want to project what that cash flow is going to look like. So you might have your starting cash and then talk about your revenues coming in, and then what expenditure you're going to have. So how much money you're going to be spinning off per month throughout the project, so you can fund your share of it. This is more for the more risky projects, but it's just something to keep in mind that you may need to have that in the equation as well. So some simple tips of how to present your financials and extract some metrics to put into your grant application. Hope this has been